Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. In this video, I want to talk about some stocks that have been beaten down from their all-time highs at varying degrees. So we're going to get right into that. If you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button. So the first name on the list is going to be PayPal. It currently has a $249.72 billion valuation. It was actually up nicely 2% today, and taking a look at the FinViz map of the S&P 500, it was one of the few big name winners today, other than maybe Facebook, as the rest of the S&P 500 was pretty scattered, with energy doing pretty well, with everything else really sideways. And looking, let's say, at the last 1 year, of PayPal, we see a big rollover over the entire year, even though we are up 10.73% over the last 200 trading days. At the same time, we've also seen highs of 310, which we saw back in July of this year, and ever since then, we are down a nice 30% on a pretty big component of the S&P 500. I know in most growth ETFs of the S&P 500, PayPal is within the top 10. Right after big tech, and I think one day it could be considered as big tech and get bigger and bigger, perhaps closer to that $1 trillion mark, maybe 10 years down the line. I don't know, I'm just guessing here. We'll take a look at the charts afterward once we get through our list, as well as NIO. It is now trading at $40.57 with a market cap of $61.93 billion. We see, looking at the last year, we had our all-time highs back in February around $66, $66.99, so $67, and ever since then, we had a pretty big downward move. Down 43.97%, and to today we're down 35.44% from the all-time highs. And I know a lot of people are very bullish on NIO. Some claim they are the Chinese Tesla, even though Tesla is closer to a $1 trillion valuation, and this one being almost 62 billion. And not to mention, they also use the battery swap technology that Tesla use, the charging stations that we all know in North America. The next one being Beyond Meat, and this stock has been a very volatile one since I got into the stock market. I remember the last time this one was under 100 was right after the crash in March of 2020. So we see a 52-week high of 221, and I remember actually buying into the stock maybe at 120. And I remember immediately a week or two later, it was up to 220, and I was actually sleeping. And within the intraday, it went from 220 all the way to 180, and it never went back to 220 again. So the stock is very volatile. It does move very quickly. It now has a market cap of $5.31 billion. And the reason why I think this could be a very interesting play, we'll look at the charts as well, and I'll explain what I mean by that one. The next one being Disney is now at $158.43 billion with a market cap of $287.89 billion. And I often compare this one to Netflix because it has a similar market cap. Here it has a $300.91 billion market cap. However, Disney is a conglomerate and also does the same thing that Netflix does in terms of Disney Plus. And I feel like for such a similar price, Disney gives you so much more. Perhaps I'm oversimplifying it, but whereas Netflix is trading at its all-time high or nearby it, Disney is well off its all-time high of $203 that we saw earlier this year back in March. Another stock that's pretty off its all-time high is Facebook stock, or should I say Meta Platforms, now trading at $347.56. It actually had a pretty nice day, in addition to PayPal being one of the only other big stocks that were up on the S&P 500 today. It's fallen out of the $1 trillion club, and I'm pretty confident if there's no big sell-off in the broader markets or there's no specific news to Meta, this will join its $1 trillion friends in the not-too-distant future. We look at an all-time high of 384, which we hit earlier this fall, September 2nd, right before that correction in the NASDAQ and the S&P 500. We hit 380, and then a couple strings of bad news and negative sentiment sent the stock all the way down to about 308 intraday, and ever since then we're above about 10-11% since those lows. I've already given my thesis on FB stock quite a bit on this channel. Pretty much I think it's undervalued for a mega cap stock. We'll also see that one on the charts momentarily, as well as Tesla stock. This one as well had a 52-week high of 1243 not too long ago, pretty much 10 days ago. However, since those highs, we are down 17.6%, and that isn't nothing. And that's a stock market. Things happen really fast. You have to act when you see opportunity. I see it's down 12% from its highs. Does that necessarily mean I want to buy it right now? And the last stock well off its 52-week high is Desktop Metal, which had its earnings today, which is one of the main reasons I actually want to bring this up. So this is Monday after hours. It is down 6.23%. It had a 52-week high of 34.94, which we see was back during the mania back in February, right before that big sell-off, and we are now down 76%. It's going to be more on Tuesday morning after the stock sells off after the pre-market. So taking a look at the candlestick. So we're actually going to look all the way down here for where PayPal is right now. So we're looking at the daily. We see back in the middle of October that it broke this trend line very, very cleanly. And then after the earnings, it fell even more. And staring at that RSI, we were very oversold. Even though it had potential to go down to 180, it looks like this could be the potential bottom. Not to mention today we see a very nice doji candle, meaning it's indecision between the buyers and the sellers. We see the buy and the close pretty much around the same level with equal level wicks on both sides. And zooming out, so if this is a recovery, we do expect it to fill the gap all the way up to 226. I don't see PayPal going anywhere soon, meaning it'll eventually recover. It'll eventually make new all-time highs. It's just a matter of when. It could be this year. It could be in 5 years. Well, stocks can be very unpredictable. Just check out Alibaba, for example. The first target area, we're looking to fill that gap over here. As a long-term investment, anywhere in these depressed levels are much better than the all-time highs above 300. But as well, if we look at the weekly, we'll also notice that this stock ran up quite significantly since those March lows in 2020. So even though, yes, you are getting it at a pretty big discount from the all-time highs, also take into consideration that PayPal doesn't trade cheaply whatsoever. The next stock on our list will be NIO, looking at, actually let's look at the weekly first for this one. So we actually see a pretty nice potential double bottom. So maybe from April, May time to June, and as well as September to October. This could be pricing in a nice double bottom, both times below that 50 EMA, which is that green line. And right now we're above that 20 EMA on the weekly. So if we see some kind of continuing rally, especially if we eventually break this 55 level, and then eventually looking at the 65 level. And looking at the daily, we've just been trading sideways for now. But again, if we get some kind of momentum toward the upside, that could be really bullish for the stock into the end of the year. Taking a look at Beyond, and this one has been pretty volatile, but the one candle I want to look at specifically is the gap down here. But we see this candle right here. It's a nice hammer candle on huge volume ever since this volume over here that had a gap up. And what I've noticed about Beyond, no matter really where you look, it always fills the gap. There's several gaps. You see this one, it fills. This one, it eventually fills. This one's here from May and early June, filled over here in September and October. So statistically, Beyond fills the gap more often than not, and I don't see any times that it really hasn't. So that trend is going to continue. It'll fill the gap to maybe $94. Now, not for sure, but statistically, it is in your favor. Especially with this candle over here, and that volume does give me a lot more confidence. And the next stock being Disney. And we see this one also sold off after the earnings on pretty big volume. And this is not looking healthy. We've made even new lows. Zooming out a little bit, we can draw this line over here. And this is a gap actually that Disney hasn't filled yet ever since about a year ago, pretty much since the beginning of December. And I remember actually talking about this gap. It might have been January or it might have been May on this channel, saying that it could fill the gap eventually. The gaps could take like a year to fill. At the same time, like you have no idea if it's eventually going to fill or continue making new all-time highs, and then you lose all that opportunity by waiting on the sidelines. So just to show that gaps, most of them fill, but not always, and it's looking like this one is on its way to do so. And that could be a great opportunity to actually buy shares. We are reaching oversold territory on Disney. This is a conglomerate again. And the last year and a half has been a nightmare in terms of their cruise lines, of course, and the theme parks, and even producing movies and animations and all that. They have been significantly hindered, and they've been facing a lot of headwinds, but as a long-term investor, just like PayPal, you're just eating it up at these prices, looking at the long term. All right, taking a look at Meta stock or Facebook stock. I actually drew this the other day that this is a channel, and it actually broke through it. Even though it found some selling pressure today, it's still above this channel. So if we see some kind of coiling above, let's say 345, it could be possible. I know I'm drawing a lot of lines at this point, that we are creating a new trend toward the upside. So what I'm actually going to do is I'm going to remove this 20 EMA for a second, guys. And what I'm going to do is I'm going to add a new moving average. But instead of the 20 EMA, I'm going to put in the 200 simple moving day average. And changing that to purple. So what we can see is this 20 SMA, which I noticed earlier this year. And this was during the whole WhatsApp signal fear, uncertainty, and doubt. That Facebook coiled up right at that 200 SMA and found support again, and then beasted for like the next 6 months. So what I noticed again was that the 200 SMA was also being touched in early November, and although it could have just as easily broken down to 300, also found support there again. Unfortunately, I don't have the ability on TradingView to have more than a couple moving averages at once. When I'm looking at charts on my own personal platform on my brokerage, I have the 50 EMA, the green line, the red line, the 20 EMA, as well as this 200 simple moving day average. And taking a look at Tesla stock now. So a lot of news with Elon and him selling his shares, but So remember when this was super overstretched and overbought? So no surprise that that news happened to come out when things were where they were. We see these two doji candles and then a bunch of selling off afterward. And even today was a pretty large doji candle. The buyers and the sellers were nearby, and a big wick on the bottom and a little smaller one toward the top. We still have this gap under 950 all the way down to 910 or so. We also see increased volume over the last few trading days, which increased selling, and even more selling. But potentially this bigger wick on the bottom could tell us that buyers were stepping up, but who knows? It's Tesla stock. It does what it wants. Would I be surprised if this one was 1200 by the end of December? Nope. Would I be surprised if this one was under 900 by the end of December? Not at all. And lastly, taking a look at desktop metal stock, and this one after hours is trading right over here. We haven't fallen off the cliff like we have with PayPal or Disney, even Beyond Meat for that matter. So we are still trading between this range of, let's say, $6.85, $7. You could draw one maybe over here around $7.90, $8, and then perhaps one more around $9. So we're still within these ranges. Hasn't fallen off, but if it does break the $6.85, $6.90 level, we don't have any more data on the left, so this one could keep falling to who knows where. And that is the end of my video. Let me know in the comments below if you are interested in any of these beaten down stocks. If you're new to the channel, remember, hit that subscribe button. As always, that like button, and I will see you in tomorrow's video.